Value mutual funds are a popular investment choice for those seeking long-term growth with lower risk. These funds focus on undervalued stocks, meaning companies that are trading below their intrinsic value based on fundamentals like earnings, dividends, and book value. By investing in these funds, investors aim to benefit from steady appreciation, reduced volatility, and consistent returns over time. What are value mutual funds? Value mutual funds invest in stocks of companies that are considered undervalued based on financial metrics like the price-to-earnings (P/E) ratio, price-to-book (P/B) ratio, and dividend yield. These companies often belong to established industries, have strong balance sheets, and pay regular dividends. Value investing is based on the principle that markets occasionally misprice stocks, and over time, these stocks correct to their fair value, providing higher returns for patient investors. Key characteristics of value mutual funds. Invest in undervalued stocks. These funds focus on stocks that appear to be trading at a discount relative to their intrinsic value. Lower volatility. Value stocks are often less volatile than high-growth stocks, making these funds a safer investment during market downturns. Dividend-paying companies. Many value stocks belong to well-established firms with a history of paying dividends, offering additional income. Long-term focus. Value investing requires patience, as it may take time for the market to recognize the true worth of these stocks. Advantages of value mutual funds. 1. Lower risk compared to growth funds. Value funds invest in financially stable companies that have already established themselves in the market. This reduces the risk of severe price fluctuations. 2. Consistent returns and dividend income. Many value companies distribute regular dividends, providing investors with a steady stream of income in addition to capital appreciation. 3. Strong performance during economic recovery. Historically, value stocks tend to perform well during market rebounds after downturns, as investors shift their focus towards stable, revenue-generating businesses. 4. Better risk-adjusted returns. Since value stocks trade at a discount, they typically have a lower risk of price corrections compared to high-priced growth stocks. Disadvantages of value mutual funds. 1. Slower growth compared to growth funds. Value funds tend to have modest growth rates, as they focus on mature companies rather than rapidly expanding startups or technology firms. 2. Long investment horizon required. Value investing requires patience, as it may take years for the market to fully realize a company's true worth. 3. Market timing challenges. Just because a stock appears undervalued doesn't mean it will appreciate quickly. Some stocks remain undervalued for extended periods, leading to potential underperformance compared to broader markets. Who should invest in value mutual funds? Conservative investors looking for stability and lower risk. Long-term investors willing to wait for stocks to appreciate. Retirement-focused investors who prefer dividend-paying stocks. Investors seeking diversification with less exposure to high-growth, high-volatility sectors. Value mutual funds offer a balanced approach to investing, providing exposure to stable, dividend-paying companies while limiting downside risk. They may not deliver the rapid growth of high-flying stocks, but they provide long-term wealth accumulation with lower volatility. Whether you're building a retirement portfolio or looking for a more conservative investment strategy, value mutual funds remain a reliable choice for steady growth.